Okay. Good morning, everyone. Firstly, I feel a little odd. I'm used to speaking behind something like that, so I feel like a stand-up comedian or evangelist, but I'm neither any of them. And also, I solved the mystery of this thing. I was told not to step outside this because otherwise you won't be filmed. So anyone who's following me, remember that. So, yeah? Okay. Like I said, I'm the CEO of a company called Arise, and I'm going to talk to you a little bit about what Arise does and how a public-private collaboration in the financial sector in our own small way and what we are doing towards financial inclusion. I'll give you a little bit of background about our business mandate. Sorry, I'll use my glasses also. Yeah. Talk a little bit about what we consider to be public-private partnerships, and also what makes Arise unique, and the power of effective collaboration, Arise's challenges in Africa. This is just a little insight I'll try and give you in the 20 minutes that I have. At the outset, I like to say it is that our main purpose why Arise was set up was to provide a catalyst for growth in sub-Saharan Africa. And this was largely done through access through financial inclusion.
So sorry to butt in, but the microphone has
I knew
off.
that something was going to happen.
Yeah, it'll ruin the sound. And I have no idea what I'm doing here, but I think it goes a little bit like that. There you go.
Yeah, okay, thank you.
Yeah?
Yeah, I think they didn't. Yeah, I better keep these on then. Yeah. Yeah, so let's get back to this. So our main aim is to provide a platform for growing the financial sector in Africa. And through that, we believe that we can build very strong financial service providers in the continent, and I'll run through that as we go along. We are very commercially focused, so we are not an NGO or aid-funded at all. And that's the main mission for us, is that we invest in profitable enterprises. I'll give you a little bit of insight as we go along on the investments that we have, and I will show you. And our main aim is to be recognized as a leading and the most trusted development partner in Africa. That's our ultimate objective. And that's really what we strive to be. Just a little bit insight on the common perception of public and private partnership. I grew up thinking PPPs are about large dams and power stations and toll roads and other things, and private enterprise use governments to provide services, etc. I think the important thing to demonstrate here that in small ways you can get a company like ours, which I consider to be a public-private partnership. Our asset base is about $800 million. That's our investments, and they're spread right across Africa into small companies. And we are a very strong public-private partnership. So I think that's a really important element which I wanted to demonstrate today to everyone. Just a little insight about who our shareholders are. I'll start from the right-hand side, because I'm in Norway, right? We are 48% Norwegian-owned, and our anchor investor is Norfund, which is a government-funded fund which provides risk capital in developing countries. Norfund was the pioneer in creating Arise, and along with Norfund, not many people know, we have KLP, which is a large pension fund in Norway, which deals with municipal pensions, is also a shareholder. And we also have a family house in Norway, which is also a shareholder. And between them, they own 48% of Arise. The other two shareholders are FMO, the Dutch Development Bank, again, a public-private partnership, and Rabobank, which is the largest cooperative bank in the world. And it's also, I think, in the top 30 commercial banks in the world. So this partnership was created by these three blocks of shareholders, and the main purpose was to grow financial sector investing in Africa. So how do we do this? We are not limited to a specific project, but we represent a long-term collaboration between the public and private sector. We share a common vision of economic growth and prosperity for the people of Africa. That is the main mission which we work on. We build strong local partnerships, and I'll run through some of our investments, which will show you the partnerships which we have built. We want to make a positive impact in our own small way, and we obviously work in small building blocks, and we obviously want to give competitive returns to our shareholders. That's the only way we could be sustainable in our view. So we do successful investment transactions. I will run through some of these. We've been in operation for 2 years, and in these 2 years, we've built in Uganda the second largest bank, a local bank, largely. We've acquired this investment in Ghana, and we've also done, which we are very proud of, in December, an investment in Mozambique, and Mozambique's been in the news recently, as you must have all heard about, and it's been really terrible. The impact of that is not shown to the rest of the world. We will still have in the news on a bombing which kills 2 people in the West, right? But we have a tremendous tragedy going on in Mozambique, and we are very proud of our investment there. We also spend a lot of time in skills development and knowledge sharing. We run a separate banking development section in our organization, which provides value to our investee banks. We provide technical assistance to our banks, which we invest in. We have a strong environmental and social segment. We employ specialists which work on E&S matters with our investee banks. And obviously, risk and compliance, which is the buzzword currently in most institutions. We try and be a bit real about this subject. Otherwise, you're drowned by legislation and makes things very, very difficult. James talked about that. And we bring access to best practices in our investments. We also leverage our relationships. As you see from our shareholders, we have strong relationships. And how does a public-private partnership work? Through NoFund, which has been in the frontier of doing financial development and financial inclusion in Africa, Central America, South Asia. Through them, we leverage their access to expertise and funding. Through Rabobank, they are pioneers in agriculture. They are the premier institution which specializes in agricultural lending. In James's bank, Rabo is working very closely with them to develop value chain agricultural financing. FMO is the largest debt provider in Africa to the financial sector. So we leverage off them in helping our banks grow. So we have a number of aspects which result in what we call value add to our institutions. So, I can cover this and spend a lot of time in what we are doing. So all of our institutions, in terms of access to finance, technology, jobs, gender balance, building capacity. So we are just not a financial investor. This is a key focus area for us as we go along. And it's really, really important. This is a key deliverable of our shareholders to demonstrate that how we can add value to our different investments. I'll come now to what all we own. We are the largest shareholder in a bank in Tanzania called NMB. And again, our focus is to only invest in local institutions. We do not invest in multinational chains. We do not invest in large regional players out of South Africa. In Tanzania, we're the largest shareholder in a bank called NMB, which was, again, a microfinance bank originally. It is what I call a smaller version of Equity Bank. So there was this question about, are there other champions in Africa? That's our aim, is to make every investment of ours an equity bank in the market. I can run through the statistics. I don't think that's the whole idea, but to show you, the number of accounts which they have, etc. Kenya, and I'm happy that James was before me. I don't have to tell you much about Equity Bank. We are the largest shareholder in Equity Bank, and we are a key anchor investor. So all these people from Norway here, who heard James, you have a stake in Equity Bank too, right? So I think I'm not going to tell you much about it. In Ghana, just to tell you what we are trying to do, we've invested in a bank which is not a mass market bank. It was a niche bank which dealt with basically large loans, and a majority of their portfolio was related to oil debt, which was created. And since our investment for the last 2 years, we are trying to move them down the value chain. And that is always difficult, as was highlighted earlier. But, we'll keep trying as we go along. Similarly, in Zambia, we own 47% of Zambia National Commercial Bank, which is, again, the second or third largest bank in Zambia. Again, we have the same mission, to grow the bank, to grow the SME book, and to make them the leading player in financial inclusion. In Uganda, like I mentioned earlier, we are a largest shareholder of a bank called DFCU, and we helped DFCU become the second largest bank last year by helping them acquire another bank. And again, they're a local bank with local cultures, local management, and that's our aim, is to see them grow. And of course, we've been very brave in the past. We have an investment in Zimbabwe, right? And we have not ever exited that investment. It's unfortunate what is happening in that country, and it's unfortunate that the Western world exits from countries like that, right? And it's really sad to see how Zimbabwe, and by the way, it is our best performing bank in results, right? But unfortunately, because of situations outside the control of the bank, they have exchange control problems, they have currency problems, they have value problems on their balance sheet. But in terms of results, my shareholders will tell you, it is the best performing bank which we have. It's nearly as high as Equity Bank in terms of returns to shareholders. But it's unfortunate what is happening there. But again, it just shows you that we will not exit the investment just because Zimbabwe is going through trouble and we don't get returns out of the country at the moment. In Mozambique, I talked about the fact that we have actually 3 investments at the moment. We invested in a bank called Mozambique. We own a bank called BTM, which we are merging with Mozambique to make a much larger bank. And we are also a largest shareholder in a microfinance bank called Secremo in Mozambique. In Rwanda, we own a share in, again, a mass market bank called BPR, right? Which effectively tells you that, we have a fairly large footprint in 2 years, and I think footprint is not the issue for us. We are looking at markets like Nigeria and Angola at the moment, and West Africa, to grow the financial sector in those particular countries. We also have what you call initiatives which we support. I don't think James talked about this much at the moment, but still in its infancy, the partnership with MasterCard, which could leverage as much as $1.6 billion of loans in that country to 140,000 micro and small medium enterprises. And we are giving full assistance to Equity Bank to get this project to conclusion. Similarly, we help DFCU runs, I think, the only segment of they call Women in Banking. It's a separate section altogether. They run separate branches for that, etc., and we provide them with a lot of support in this particular area. Similarly, in Zanaco, we are helping Zanaco on financial literacy to enhance their knowledge of financial information, etc. And this has also been really helpful, which in turn makes it easier for them to access financial services. I mean, everything is not perfect in our markets, as you know, and I just really like to highlight in brief some of the key issues which we face. And it's not a negative list, it's more a reality list which we have to deal with, every day. We come across bad governance and corruption in different facets of what we do. We have a big problem of misalignment of risk appetite, and I'm not being critical of Western financial institutions, but risk appetite for Africa is always layered in higher interest charges, etc., because the risk appetite changes. There's a risk department which says if you want to lend to Mozambique, increase your rate by 400 basis points, right? Because that's the risk appetite. So I don't really sometimes fully understand what is going on. On one side, everyone wants financial inclusion, and we're in the summit, and we want to invest. Yes, you will invest, but you'll invest at 4% higher than what you would do in any other country. Then why do you invest at all then, right? So that's the other issue which we face in our markets. We have a lot of volatility on Forex, which is, again, an issue which comes sometimes way beyond the control of African countries. What happens to the US dollar has got nothing to do, or what Mr. Trump does has got nothing to do with the African countries and the Fed, right? But they suffer the consequences of it. We have unsustainable government lending, largely, and I think one of the biggest bubbles which we could potentially have is really the whole issue of treasury bills, which every country has provided, and James talked about it. We have underdeveloped capital markets. We have over-regulation, which James talked about. And sometimes we have political turmoil and instability. So we have all these things. But one thing I'm so glad we don't have Brexit in Africa. So thank you very much.